All right, check out shares of Meta, everybody. That stock on a 4-session winning streak. It hit an all-time high back in mid-February, but it's now down just about 15% over the course of a month. Overall, the big tech names rebounded in yesterday's market rally. And joining us right now in the sector, also which names could be impacted by the Trump administration's tariffs, is Mark Mahaney. He is Evercore ISI head of internet research. And Mark, what do you make of the pullback in these big tech stocks and then the rebound we saw yesterday? Is that for real? Does that last?
Well, I think the key construct around the pullback is simply the fact that you had a 2.5-year bull market, super bull market in a lot of these major tech platforms. So you had valuations that at the end of last year became, reasonably full, in some cases a little bit more than full. So if you have they were set up so that if you had a negative catalyst like policy uncertainty, like the imposition of tariffs, which could have a fundamental impact on some of these business models, the negative one, then that would be your negative catalyst for the stocks to trade off. And I think that's exactly what happened. Now it looks like, with some sort of calmness coming over the potential imposition of reciprocal tariffs, and maybe more of a moderated approach to those reciprocal tariffs, then that means there's less pressure on these stocks, there's less pressure on their fundamentals, and you get a little bit of a relief rally like you had yesterday.
The tariffs, when it comes to these companies, I mean, is this just seen as retaliatory actions if other countries get upset about it, that these will be the companies they go after first? Europe was already going after some of these companies with the Digital Markets Act.
I think there's part of it, but then, one of my favorite stocks, actually my single favorite stock right here is Amazon. And so you layer in tariffs, and Amazon's going to have to make that decision about how much of that they're going to have to eat in terms of reduced profitability, or how much of that they're going to pass along to consumers. And the truth is they'll probably do a mixture of both of those. And it also creates a lot of inefficiencies in a supply chain that's been, pretty well tuned over the last 5, 10, 15, 20 years. So there's just greater inefficiencies. But as long as the tariffs are highly targeted and maybe modest in scope, there's less risk for Amazon. And then there are other parts of the story that I find particularly interesting as a setup here in terms of their AWS growth outlook and a couple of new product cycles like Kuiper and even this Alexa Plus product they're rolling out. So if you've got new product lines coming out and the potential for parts of the core business to accelerate, and the stock has pulled back a lot, and Amazon at 25 times earnings is more attractive than pretty much any time I've ever seen it, then that's when you want to kind of leg into that stock aggressively. I think that point is here with Amazon.
Mark, I don't know if you heard our last interview. It was with the Alliance for American Manufacturers president. His point was that they are really eager to see some tariffs that are reciprocal tariffs and targeted tariffs that are put back on to protect American industry that they feel has been hollowed out over decades by having all these incentives to have manufacturing take place overseas instead of here. This President Trump, seems pretty sympathetic to that argument, and maybe he's a little suspicious of many big tech companies in general. I just wonder how you think that plays out over time, this shifting away from the policies that have made these tech companies such huge winners, but maybe at the expense of the manufacturing that used to be the heart of this country.
Well, when I look at these tech companies, I'm talking about Google, Meta, Amazon. I think they're three of the most innovative companies, that we have in our economy. These aren't manufacturing companies, but some of them are massive employees. I think actually Amazon now comes across as the single largest employer in the country with
I thought Walmart still had the place.
With substantial
Walmart?
Number of distribution centers and fulfillment centers,
they're
et cetera.
Probably pretty close. Yeah, both of them actually running
close. But anyway,
close second place to the federal government.
Yes, that's true. I would just, the point sort of holds with a name like Amazon, with any retailer. This will be the same issue for Walmart. You raise tariffs, you're gonna cause these companies to have to deal with greater costs. And the question is, are they going to eat those profits, or are they going to pass along to consumers? And it's kind of hard to see how that isn't inflationary to have tariffs. It's a tax, and so. That's the real risk we all face. You're going to have a tariff tax coming, and it's inflationary, and it's generally not good for consumers. And so that's also going to probably hit demand a little bit for some of these names. So there is this, pretty material risk facing some of these names. In order to own the stocks, you better have a alternative scenario. It's got to be something other than just the retail part of the business. The advantage for Amazon is that there are other parts of the business.
Sure. If Amazon is your favorite stock right here, and you thought a few months ago that many of these stocks were maybe overvalued, what other stocks do you like at these prices?
I think there's three really dislocated, high-quality names, what I call DHQs, dislocated high-quality names. Amazon's at the top of the list at 25 times earnings. I really like Uber here. It pulled back a lot on these robo-taxi concerns. This is almost tariffs are immaterial pretty much to Uber's business. But I think that pullback, because I think they're going to be able to prove over the next 6 to 12 months that they're actually a robo-taxi winner. And then third would be Google, just because it's at 16 times earnings. I think they've got an ability to surprise people in terms of their managing costs. I think they have the ability to surprise people in terms of maintaining search market share. That's what our surveys show. And then I'm just assuming that there's a greater chance of a settlement, a deal with the government now that you've got a change in administration. So I think there's kind of three positive surprises on Google. It's our number 3 pick.